Good afternoon, and thank you for joining us. Before Aaron takes you through the financial results in detail, I'd like to share how we see financial year 2026 in context of our strategy and where we expect growth to come from over the next few years. Financial year 2026 was, in our view, a year of investment. We achieved record revenue of $402.8 million, which is a new high for the group. At the same time, profit was lower year on year. This reflects external pricing pressure, which Aaron will cover in more detail, together with deliberate choices on our side to invest in our new Infinitum headquarters, to expand our technical capabilities, and to complete the integration of our recent acquisitions. These investments weigh on near-term margin and cash flows, but they have strengthened our foundation and our equity ratio improved over the year. Looking to FY 2027, our forecast is for revenue to grow to $525.3 million. I will emphasize that this is a forecast and dependent on the market conditions, but it reflects the expansion across ASEAN and Greater China regions, and the broadening of our portfolio to serve a wider range of customer needs. Over the medium term, we are focusing on two structural growth engines. The first is AI and data center infrastructure. Working with some industry partners, we are positioning ourselves across this value chain, beginning with equipment distribution and supply chain, while also exploring other roles in AI compute capacity and in data center development. These are at an early stage, and we will be disciplined in how we commit. The second is medical. This is a high barrier segment with long qualification cycles and strict regulatory standards. We expect to begin production and qualification from September 2026 and to put the necessary certifications in place by financial year 2027 end. It is a measured, deliberate entry into a more resilient sector. Before I hand over, I would like to express my sincere appreciation to our colleagues whose hard work and dedication made the progress of this year possible, and to our partners who have supported us throughout. We hope to continue to earn that support in the years ahead and to grow together. With that, I will hand over to Aaron, who will take you through the financial results in detail. Thank you.
Thank you, Daryl. I'll now provide a summary of the financial results for the fiscal year ended March 2026. Our sales revenue had increased by 8.4% year on year to $403 million, while the gross profit decreased by 12.2% to $43.7 million. Our profit for the year saw a decrease of 24.9% year on year to $12.5 million. Challenging macroeconomic conditions such as tariff-related pressures impacted market pricing and gross margins, which in turn weighed on our performance last year. Next, we put the focus on the income statement, highlighting our revenue growth driven by contributions from newly acquired subsidiaries, Eco-Poly Global Shanghai Co. Limited, also known as EPG Group. The group reported a lower gross profit margin of 10.9% as compared to 13.4% in the previous corresponding period, primarily due to price softening and weaker demands in the market. This slide outlines the drivers behind the changes in operating expenses, finance costs, and tax expenses. Compared to the corresponding period last year, operating expenses have increased mainly due to the higher selling and administrative expenses, partially offset by the decrease in other operating expenses, following continued efforts to reduce the aged inventory. Finance costs decreased by 22% due to lower bank interest rates and fair value gains from derivative financial instruments. Tax expenses also decreased by 50%, primarily driven by lower profitability and prior year tax refunds. Next, turning to our balance sheet. Total assets grew by 6.6% to $256 million, mainly from the acquisition of non-current assets. Trade and other receivables, as well as inventories, declined as a result of improved collections and proactive reduction of our aging stocks. On the liabilities side, liabilities increased by 5%, primarily due to higher utilization of trade facilities. Total equity rose by 9.4%, contributing to a 1 percentage point improvement in the group's equity ratio. Moving on to the cash flows. Operating cash flow outflow increased by 9.9 million, mainly due to lower net profit. Investing cash outflow increased by 7 million due to the acquisition of property, plant and equipment. Financing cash flow increased by 23.3 million, largely driven by higher bank borrowings. While free cash flow recorded an outflow of 6.1 million, the group ended the year with a stable cash position, which continues to support our operational resilience and future growth plans. This concludes the explanation of the financial results for the fiscal year ended March 2026. Thank you.
それでは、ここからは日本法人代表の重田より今期の業績見通しについてご説明申し上げます。まずこちらのハイライトをご覧ください。売上収益は前期比 30% 増の5億2500万ドル。売上総利益は前期比 30% 増。当期利益は前期比 35% 増の1690万ドルを見込んでおります。このポジティブな見通しは、主に新規顧客向け製品の展開拡大、および当社グループの ASEAN、中華圏における継続的な事業拡大に支えられており、これらが2027年3月期の売上目標達成に向けた主要戦略となっております。また、当期利益の大幅な増加につきましては、主として売上収益が前期比 30% 増加する見込みであることに加え、事業運営の効率化によるものです。一方で、良好な売上見通しがある反面、当社グループは重大なマクロ経済および地政学的リスクにも直面しております。ウクライナおよび中東における紛争の長期化に加え、イランをめぐる地政学的緊張の高まり、さらには米国によるグローバル関税政策の影響など、広範な地政学的リスクが各地域市場における営業費用の上昇圧力となっております。特に中東情勢の影響につきましては、原材料価格や物流・サプライチェーンコストの上昇により、収益性への影響が懸念されます。また、研究開発をはじめとする積極的な人材強化や販路拡大、新市場対応に伴う費用増加も継続する見込みです。そのような環境下においても、当社は当期利益ベースで 35% の増益を見込んでおります。現在進行中の世界的な紛争や地政学的緊張、世界的な高金利環境、サプライチェーン混乱の長期化、物流コスト上昇など、不透明な事業環境は今後も継続することが予想されます。当社グループといたしましては、業績予想の達成に向け、顧客および製造委託先との連携を一層強化するとともに、新市場および潜在顧客との新たな取引機会を積極的に模索しながら、継続的なコスト管理、抑制にも努めてまいります。なお、費用増加の詳細につきましては、こちらの表をご参照ください。今期は業績予想を達成し、投資家の皆様のご期待にお応えできるよう、経営陣一同、全力で取り組んでまいります。最後に、こちらのチャートは、一昨年以降の 配当実績を示しております。今後も経営基盤と財務体質の強化を進め、安定した配当の継続を目指してまいります。私からの説明は以上です。